So this is the second part related to the trial balance and errors and adjusting and closing entries. And this video is going to be very much important. But if you have not gone through the first part of this video, you should be considering to watch that video first of all. Then you should be coming back to this video. You'll be finding the link of that particular video in the description below. In the meanwhile, if you want to watch all the videos of JAIIB and want to get the PDF files, do subscribe to this channel and press the bell notification icon so that you get updated whenever we upload the new videos. The complete course of the JAIIB is available in Hindi mix English language as well as in English only language. So whatever your comfortable mode of languages, you can be preparing the same. You just need to save the number, which is A3609 and after saving the number, just WhatsApp on the same number writing the JAIIB or saved for JAIIB, and will be particularly sending you all the details related to it, and you'll be getting all the updates related to the same. So let's just start the session over here, and today we are going to cover first of all related to the errors of principle. So we have covered the different type of errors related to the error of clerical errors, in which we covered the error of commission, error of omission, and the compensating errors. Now we are going to cover the second category related to the errors. So we can say this is second category, and this is related to the principal errors. Principle is basically related to the rules and regulations. So when you're not aware to the rules and regulations and you made the basic errors, in that case that is said to be the errors of principles. Like wages paid for installation of machinery debited to the wages account. Now, we know the principle related that when wages paid for the installation, those are particularly related to the machinery, those must be included into the cost of the machinery itself, right? And should not be individually entered into the wages account, right? So that is a principal error. Purchase of the fixed asset on credit recorded in the purchase journal, that we have recorded in the purchase journal rather than entering it in the fixed account side, right? We have particularly entered it on the purchase journal. Now definitely it's kind of another error. So these errors will not be impacting the agreement of the trial balance, but definitely technically these points are not valid and should be rectified, right? So this is the error of principle. So first example we are going to cover, it's related to goods sold to Mr. X recorded as rupees 6,000. Now there is the error of commission. If we talk about this particular error, it is a error of commission. Why the error of commission? Because I told you under the error of commission, it was the case that either you have posted the wrong amount on the right side, or on the wrong side, or wrong amount on the wrong side, or there is a totaling error, or there is a balancing error, right? Now in this scenario, goods sold means it's a revenue, so it's a nominal account. I'm just writing over here, it's a nominal account, and these are sold to Mr. X, so we are basically going to deal with the personal account, right? And accordingly the entry is to be passed. Now goods sold is a revenue, so it's actually what it is to be credited, because nominal account has to be credited when it's an income or gain. So the sales account is to be credited and X account is to be debited with 10,000, but it was debited inadvertently with rupees 6,000. Now it is short of 4,000 entry, and accordingly it will be rectified. So the correct entry would be related to what? Rectification entry would be that it will be 4,000 short entry will be passed and it will be rectified in that way, right? So another point, it says that goods sold to Mr. X for rupees 10,000 recorded as rupees 15,000. Again this is the same point. The entry must have been related to goods sold, means sales account is to be credited and further X account is to be debited. So we'll be saying X's account debit 15,000 and to sales account 15,000. This is the correct entry. This must have been the correct entry. But right now, what entry was passed? No, it should have been 10,000, not 15,000, right? But right now, what entry was passed? The entry which was passed, that's a wrong entry which was passed. It was amounting 15,000 instead of 10,000. It was amounting 15,000. This is a wrong entry which was passed over there, right? And what would have been the right entry? Now we are to basically we have to basically make a shortfall in the account balance of 15,000 to 10,000, and in the sales account from 15,000 to 10,000, right? So we'll be adding a credit entry. We will be adding a, this was a credit entry now. So this will be, we'll be adding a debit entry of 5,000 to the sales account, and we will be adding a credit entry of 5,000 in the X account, right? So this entry is to be passed. So what will be the rectification entry? It will be sales account debit with an amount of 5,000 to the X's account credit with 5,000. This will be the rectification entry, right? So this is what is done over here. The third scenario, it is related to goods sold to Mr. X for rupees 10,000 recorded in the purchases account. So instead of recording in the sales account, we recorded in the purchases account. In purchases account, it was particularly credited or debited? It was particularly credited. Now purchase account is particularly debited over there. So basically the entry was basically made wrong. So purchase account was debited. So the wrong entry was related to that the purchases account was debited, and further to X's account was credited, whereas opposite was to be done. And which account was to be considered? Sales account was to be considered, right? So now we will be doing what? We will be we will be passing the rectification entry. We'll be passing the rectification entry related that we are to debit, we are to basically, sale is made na, sale is made. So we have to basically do what? Sale is what type of account? Sale is a revenue account. It's a revenue, right? So sale account is to be credited. The sale account is to be credited. Make sure that you know the golden rules. The golden rule says that the sales account is what? Sales account is a nominal account, first of all, and all the incomes and gains are to be credited, and all the expenses and losses are to be debited, right? So sale is what? Sale is a income account. Now we are selling something, we are getting the amount, so basically it's a income, it's a gain, so it is to be credited, right? And Mr. X account is a personal account. Mr. X account is a personal account, right? And for personal account, what are the rules? Debit the receiver and credit the giver. So here the person X is what? Person X is a receiver. The person X account is to be debited. So the correct entry must have been X's account is to be debited to the sales account. This must have been the correct entry. This must have been the correct entry over there. Getting it? Alright. And what entry was passed? This particular entry, the wrong entry was passed. Now we have to rectify the things. We are to rectify the things over here. And how we can be rectifying? How we are to rectify? Just make sure that all the accounts are settled. From here, you need to achieve this. First of all, the purchases entry is to be nullified. The purchases entry is to be nullified, and the wrong impact in the X account is also to be managed. So we can simply be saying that will be passing the entry X's account will be debited. With what amount? With double the entry amount. 10,000 amount was done. So we'll be debiting it with 20,000, right? And further to the sales account 10,000, and further to the purchases account 10,000. This is the rectification entry. This is the rectification entry which will be passed so as to basically make all the changes nullified, and so as to mark the effect of the particular said journal entry above. Getting it? So this is what we need to do. So in this particular case, what is happening? X account which was previously credited, it was to be debited with amount of 10,000. So first of all, we debited with 10,000 so as to nullify the impact, and further so as to showcase the effect, we debited it with the 10,000 again. So it made it 20,000, right? and further to sales account we credited with 10,000 and to purchase account we credited with 10,000 so as to nullify the previous effect, right? So this is a rectification entry. Is that clear? Is this particular point clear to you? There might be some issue over here. Kindly please do let me know if you're basically able to understand this particular effect over here or not. Kindly do let me know over here at the earliest. Sales account is not to be debited. Sales is a credit entry. So it will be to sales account credit. This is not mentioned rightly over there. This is not mentioned rightly over there. This is a rectification entry which is to be passed. This is going to be the rectification entry which is to be passed. This must be the rectification entry, right? Okay. Now let's move to the another one. It says goods purchased from Mr. X for rupees 20,000. You purchased the goods, right? Now purchases is what? Purchases is an expense account. Expense account. It's a nominal account, but it is showcasing expense. So purchases account is to be debited, right? Purchases account is to be debited, and you basically purchased it on credit. So who is the giver? Debit the receiver and credit the giver. So basically Mr. X account is to be credited. Mr. X account is to be credited, right? So here is the scenario. So the original entry must have been purchases account was to be debited and to X's account it was to be credited. This was the correct entry which was to be passed. Getting it? This is the correct entry which is to be passed, right? Now, what entry was recorded? That says goods purchased from Mr. X for rupees 20,000, purchases account was debited with rupees 15,000. So instead of debiting it rupees 20,000, we basically, there was a shortfall of 5,000, right? The wrong entry which was passed was 15,000. And so as to basically rectify the entry, we'll be passing the same entry with 5,000 again. That will be the rectification entry. This was the easier one, right? Is that clear? So this is the rectification entry. I hope that you are clear with it. I hope that you are clear with the concepts related to it. I'm just going to write the golden rules over here again. I'm writing for you the golden rules to understand the logics. First of all, if we talk about the real accounts are related to the tangible assets or the intangible assets, right? So the golden rules are for real accounts are debit what comes in. So if you are receiving the cash, it will be debited, right? And if you're paying the cash, it will be credited. So credit what goes out. This is for the real account. And what about the nominal account? Nominal accounts are related to the expenses and gains. So it is debit all expenses and losses. So whatsoever the expenses and losses are there, those are to be debited, and credit all the incomes and gains. So whatsoever the incomes and gains, those are to be credited, right? And what about the personal accounts? The third category is related to the personal accounts. Debit the receiver, the person who has received the funds is to be debited, and credit the giver, right? So these are the golden rules. These are the golden rules. For real accounts, it's debit what comes in, and for the credit what goes out, right? And for nominal account, it is debit all the expenses and losses and credit all the incomes and gains. And further, for the personal account, it's debit the receiver and credit the giver, right? So these are the golden rules. Okay. Now, let's jump to the section where we'll be learning what type of errors do not impact the trial balance. Now, trial balance is only impacted if only one leg is impacted, or let's say when we particularly made the changes in the particular sides, right? Then only it impacts. Like what account was to be debited, we basically credit that account, right? But even that is not going to impact the trial balance. Why? Because in particular trial balance, we are going to check the arithmetic accuracy only. We are not going to go for the principles. We are not going to check that what particular account was debited or credited. Let's take the case that purchase account was to be credited, but we debited. It will make no difference in the trial balance agreement because there was no change in that, right? So what type of errors are not going to impact the trial balance? It's the error of complete omission where we completely omitted the entry. Error of commission. Let's say that the wrong entries were posted or on the wrong sites if those were posted. Error of principle that you do not know the logics behind it, or even the compensating error where one error or one mistake is nullifying the impact of the other mistake. These things are not going to impact the trial balance at all. The trial balance will not be impacted by this case. Is that clear? Okay. Now let's have a look at the rectification of the errors. Rectification of the errors. It may be the case of the one-sided errors. Let's say case that you posted correct entry on the debit side, but on the credit side, instead of posting the entry of rupees 3000, you posted the entry for 300. Now in that scenario, both the legs are not to be disturbed, and only the leg where the shortfall was. Let's say on the debit side we were to post a 3000 entry, but we posted 300 entry. So on the debit side we will be posting an extra entry of 2700 debit. That will make the changes to it, and this is how it will be rectified, right? So no entry is required to be passed as it affects only one account. So where there are one-sided errors, no entry is required to be passed, right? Because it is affecting only one account. So salary paid rupees 8,000 if it is posted at 80,000. If it is posted as 80,000, will be posting another entry of 72,000 debit. That's it, right? Sales register undercast by rupees 100. If the sales register was undercasted by rupees 100, we'll basically having another 100 rupees entry toward it on the credit side. Amount received from Suresh rupees 200 posted on his debit side, right? Now in that scenario also we'll be posting entry of 400 on the credit side. This will basically making the changes to it, right? So these are one-sided errors. And what about the two-sided errors? When two or more accounts are affected. Now that is what? That is a two-sided error. In two-sided error, a particular entry is to be passed accordingly. Like let's take the case, goods sold to Mr. X rupees 10,000 omitted to be recorded. Now when the entry is omitted to be recorded, the entry is to be passed, right? Goods sold. So sales account is to be credited. Sales account is to be credited. And for the Mr. X account, because he has received the credit, so mix receiver is credited. So it will be access account debit with 10,000 and further to the sales account credited. This would be have been the regular entry. And what is this type of error? This is the error of omission. We have completely omitted the particular thing, right? Nature of transaction is particularly related to what? It is not recorded. So we'll be recording the transaction, right? That will be the case. So rectifying entry would be related to what? X account is to be debited and sales account is to be credited. The second scenario is goods sold to X rupees 10,000 recorded as 6,000. The entry was particularly short by 4,000. So the correct entry will be posted for rupees 4,000, right? So the same previous entry was there, but with the amount of 6,000. So access account was debited with 6,000 and to sales account again with 6,000. The entry is short by 4,000. So another entry will be posted. This will be the rectification entry in green ink. So access account will be debited with 4,000 and sales account will be credited with 4,000. This will be the rectification entry that will be posted. Now this is what type of error? This is error of commission. This is error of commission. What type of error this is? This is not error of omission. This is error of commission, right? Is that clear? Okay. Now let's move to the another one. Instead of recording it for 10,000, it was recorded for 25,000. There was upcasting of the particular amount. The correct entry, the wrong entry which was passed to be access account debited. Instead of 10,000, instead of it was recorded to be 25,000. And further, sales account credited with 25,000. Now it is upcasted by 15,000 amount. So we will be passing the contra entries, the opposite entries, so as to nullify the impact. And with what amount? With 15,000. So now the correct entry, rectification entry, will be sales account is to be debited with 15,000, and further to the access account it will be credited with 15,000. Is that clear? So this will be the rectification entry. So this is going to be the rectification entry as posted above, right? So the sales account, the contra entry will be passed and it will be set off, right? Now the another one, it's related to goods sold to X rupees 10,000 recorded in the purchase book. Recorded in the purchase book. Now goods sold was to be recorded in the sales book, but we recorded in the purchase book. What entry was paused? The entry passed was purchases account is particularly debited, na? So purchases account was debited. Purchases account was debited and to access account was credited. This entry was passed, right? Now we'll be nullifying the impact first of all. First entry would be related to what? The first entry to nullify the impact, the opposite of the same. That's the X account is to be debited and to purchase account to be credited. And the right entry would have been goods sold. That is, sales account is to be credited and X account is to be debited. So this is the first entry which is to be done, and second entry which will be done so as to basically make sure the correct entry is passed. That is, access account is to be debited and to sales account to be credited. And now combining these two, that will making it access account to be debited with 2x of the amount and to sales account and to purchase account, right? This would have been the rectification entry, right? So the amount involved was 10,000. So it will be equal to what? It will be equal to access account is debited with 20,000, sales account credited with 10,000, and purchases account credited with 10,000 over here, right? So this is how the entries will be rectified and those are to be passed in the accounts over there, right? Now, very important topic, it's related to suspense account and the rectification. Now, what do you mean by suspense account? When there is suspense related to, I don't know where the entries will go. It will go to what account? It will be going to the suspense account. Let's say we have prepared the trial balance and there is disagreement of the trial balance. Now we are to temporarily transfer the particular entry to the account which is called the suspense account. So temporarily it is to be passed to the account which is said to be the suspense account over there. And suspense account is what type of account? It is a temporary account. It's a temporary account. Now it may be the case that during the course of audit, one-sided errors may be found, right? One-sided errors are found. Now in that particular scenario, when the one-sided errors are found, the second account is to be suspense account. Now the whatsoever the difference is, that will be transferred to this suspense account over there, right? Now that is the case when we are basically going for the trial balance preparation during the audit process over there. And it may also be the case that the books are closed, but there were some issues which are to be rectified. Let's say you have prepared the balances, but now particularly you are to rectify the errors over there when there is difference in the trial balance. Let's say that you have basically applied the various checks, you have carried out whatsoever the due diligence was there, but you're still not able to basically find out the difference issues. Now in that scenario, you cannot be delaying the preparation of the final accounts for indefinite period, right? The final accounts are to be prepared. In that particular case, one particular account will be opened. That is a profit and loss adjustment account. What account will be opened? It is a profit and loss adjustment account will be opened over there, right? So personal account balances, let's say those of the customers, suppliers, those can be carried forward, right? Now there are different type of accounts now. If we talk about the personal accounts, and if there is error something related to the personal account or something, that can be carried forward because the balances are not made zero, right? So these balances can be carried forward in the next financial year. But if the rectification is related to the income and expenses accounts, that is related to the nominal accounts, in those scenarios, those nominal accounts are basically made to be zero, made to be zero for next FY, for next financial year. Now, if those are carried forward, then they will be interfering the true picture of the next financial year, and that is actually not to be done, right? That is not to be done. So, as for the those particular nominal accounts, when we are to manage the trial balances for those particular errors which are not rectified, and we cannot be delaying the preparation of the balance sheet for the indefinite period, a particular account is opened, which is what? Which is a profit and loss adjustment account, right? So profit and loss adjustment account will be opened so as to rectify the errors in the nominal account. So balance in the particular account is directly transferred to the capital account thereafter, right? So now let's take the example that the error was there. The error was there that wages of rupees 10,000 of last year not recorded. Now what would be the entry for the wages account? Wages account is what? Wages account is a nominal account and it's an expense, right? It's an expense, so it will be debited. So wages account was to be debited with the amount of rupees 10,000, right? That was the entry. Now what will be done to outstanding wages which are pending right now? That will be what? That will be the wages account will be credited and profit and loss adjustment account will be debited. That will be done so as that adjustment entry will be passed. So this adjustment entry will be passed over there, right? Now after that, it's related to the adjusting and the closing entries. Again, this is very much important topic. That is related to the adjusting and the closing entries. Now, what do you mean by the adjusting entries? Now, when the accounting year ends, all the ledger accounts will be balanced first of all. Now, what is the process? What is the general process? First of all, the entries are entered into the journal. Okay, journal entry is done. Then after that, posting is done into the ledgers. So the ledgers are being prepared. And after that, the balancing is done. We say the balancing is done. After the balancing we have done, we do prepare the trial balance so as to check the arithmetic accuracy. And after that, the final accounts are prepared. Then the final accounts are finally prepared, right? That is the case. That is a trading account, uh, profit and loss account, balance sheet. These are drawn, right? Now, while preparing the trading and profit and loss account, all the incomes, all the expenses, all those particular things which were related to the current financial year, those are to be taken into consideration. Those are to be taken into consideration. Now, it may be the scenario that the expenses have incurred but have not been paid. Like it may be a case now. Let's take in the case of the banking sector. Let's take the case that you were basically accruing the interest. We were accruing the interest for the saving fund, right? Interest for the saving fund that is particularly accrued but not paid to the customer, but not paid to the customer. And also on the loan accounts, interest was accrued but not received, not received. In the same manner, it may be the scenario that you have made the prepaid expenses, that we have made the prepaid expenses. Let's say case that the rent was paid in advance for the month of April, May, June, right? That is basically belonging to the next financial year, but we have paid it earlier, right? For those all the cases, those all the cases are to be covered and adjusting entries are to be passed so as to showcase the real picture of the current financial year, right? Is that clear? So accrued revenue is what? Accrued revenue is the amount of receivable. Accrued expenses is amount of payables. Prepaid expenses are assets and prepaid revenues are the liabilities, right? And what do you mean by the closing entries? What do you mean by the closing entries? So at the end of the each year, all the accounts of expenses and incomes must be closed. When the particular financial year end, all the expenses must be expenses accounts, income accounts, that must be closed. I just told you that the balances of the nominal accounts becomes zero because the balances are transferred, right? So the balances becomes zero of all the nominal accounts, right? So the balances of these accounts are transferred to the trading account and profit and loss account. Entries are to be passed, and these particular entries which are passed so as to make these entries zeros, this is said to be what? This is said to be the closing entries. Is that clear? Now you know the concept related to the adjusting entries. Now you know the concept related to the closing entries and so on. You all also learned about the various type of errors. So as to just summarize, let me just tell you what different type of errors are there. First of all, let's type right over there related to the types of the errors. I told you it could be related to the clerical errors, or it could be related to the error of principles, right? These type of errors can be there, errors of principles, right? And further, the clerical errors are divided into the error of omission and the error of commission, or further compensating errors. Compensating errors, right? So these were the different errors we talked about, and we learned a lot of things about it. So if you found this video helpful and if you learned the concepts from it, do give this video a thumbs up. And if you want to get all the PDF files, just simply save the number 83609444207. Just save this number and WhatsApp on the same number, writing saved for JAIIB, and we'll be adding you to the update list and you'll be getting all the updates over there. So that will be all related to this video. Thank you so much and see you again in the next video tomorrow. Learning.